Welcome to week 169. You're in the Raccoon Den, the Spring Real Estate Team's headquarters here on Camden Street in Toronto. And today we're going to talk about houses and condos in Toronto. But more importantly, this year started off as the year of the house, when houses just started going nuts again after January 25th's rate announcement. People seemed to be more calm, more certain. So they started going after houses like they basically didn't have any other housing option, which is pretty interesting considering rates were, massively higher than when that sort of activity was last seen in the first quarter of 2022. So, but we evolved from, I shouldn't say evolved, but we moved from people paying a ton of attention to houses to folks starting to finally pay attention to condos more seriously. And not just any condo, but the larger condos are moving a lot faster than we expected, especially in buildings like 55 Front, which is one of the most desirable condos in downtown Toronto. And other boutique buildings like that tend to have, very little inventory. So when units do hit the market, they do fly. But I haven't seen $2+ million condos sell as fast as they are right now. But it shouldn't really be a surprise considering Toronto's aging population. A lot of folks who are retiring or getting close to retirement are opting to stay in the neighborhoods that they love, that they've been in for so long, and they're cashing out on the massive equity they have in their houses that they bought for like $8 back in the day, and buying these condos to use essentially as a pied-à-terre in Toronto, and so they can live their fabulous retired lives. And that's just one of the awesome things that real estate can do for you, which I really respect and appreciate. Your principal residence is generally not the best investment for you. I mean, there could be better ways to spend your money, but I believe that everybody should do whatever they can to get their foot into a market, into any real estate market that you can afford, until you have built enough equity there to be able to buy in the market you really want to be in, the one that you live in. Where I was going with that is a lot of these retirees or soon to be retirees are spending a ton of their equity on these larger condos. So if you are an investor and you're looking to pick up a condo as an investment and your budget allows for, an entry level studio or a 1-bedroom, go for it. You'll do fine with those as well. You'll have very easy time renting that kind of place out. But if you do have the budget to get into a larger property, then I would consider that as well, especially if you're in any of the communities surrounding the core, like think Roncesvalles, Leslieville, High Park, like all those neighborhoods that are surrounded by a ton of multi-million-dollar houses. Those houses are full of people that are eventually going to want to downsize into something, and they're not always buying. So whether you flip it to somebody who wants to buy, or you get an amazing long-term tenant in there for somebody who just cashed out on their real estate investment or their home and wants a local rental, then you'll do well there as well. It will take you a little bit longer to rent out any unit in a more dense building. And, we're seeing that right now with Wonder Condos in Leslieville at Logan and Eastern, between Booth and Logan on Eastern. Like, I sold a lot of units there, the most successful pre-construction project I've ever worked on, which is a drop in the bucket considering what these big pre-con agents are actually selling. But for me, it was very successful. And all of my investor clients there are now coming to us to lease those units out. And we're seeing a lot of competition in the leasing space. So if you are buying a unit as an investment, especially in a building that has a lot of units, say 150 plus units, you are going to be competing with a lot of similar units on the market. So that is something to consider. So your vacancy period at the beginning might be a little bit longer while things kind of balance out and inventory gets scooped up, and it will. These units aren't just going to sit there. Now, I would caution against just chopping your price to see if you can undercut the next guy, because all you're really doing is shooting yourself in the foot. Like, the fact that rent control doesn't exist on a lot of these, on all of these newly built units, doesn't mean it's going to be that way forever. There is going to be a provincial government put in place that's not Doug Ford at some point, who is probably going to roll back his rent relief, I guess, for landlords. So I suspect that rent control will be reimposed at some point. So I wouldn't bank on just being able to jack the rent as much as possible down the road. What I would do instead is I would offer some sort of incentive to secure a tenant, but sign a lease at a higher price, because any future increases can be based on that higher price, not the short-term discount you might offer just to secure a good tenant. So we can talk about that kind of stuff separately. Just message me and we'll get a conversation going. But back to the topic of condos in Toronto, especially in our tighter urban communities surrounding the core, they're doing very well right now, despite the fact that there has been a steady increase in condo supply over the past 5 weeks now, with the exception of last week where there was a little bit of a pause with new listings added there. But with condos, though, I'm not worried about the increased listings because there are also sales increasing. Like this week, we had almost 150 condo sales in 1 week. And that is the most I've seen in an incredibly long time. But switching gears into houses right now, again, last week, houses did not add on any new inventory. They actually pulled back supply. However, this week added a tremendous amount of listings. I actually don't have my, do I have my blog handy? I think I do. So last week, over the past 7 days, house sales were down 31%, while supply increased by nearly 11%. So that's not a great sign in the short term anyway, for anybody that needs to sell their home and is looking for like a huge number. That may not be a thing right now. Although I wouldn't say there's a slowdown in place right now that is noticeable. What we're just not seeing right now are an insane number of offers coming to the table. Like in March or February, March, and a little bit of April, a lot of houses would have like 15 to 30 offers on it because there was literally nothing on the market. Like at that time in our urban markets, we had under 400 available listings for sale, somewhere in the 360s. You can look back on the blogs and see for yourself. And now we're approaching 600 house listings. So we've got a tremendous amount of supply that didn't exist then. So all these buyers were going after these one or two places that they seemed that they deemed reasonable for their needs. So right now, those buyers are spread amongst many more listings, but still not enough to prevent multiple offer situations. Like my client picked up a house last night. We just found out this morning that he actually got it. It was a house that needs a full top to bottom renovation, and still there were 3 offers on it. It sold for a great price, in my opinion, like under $1 million, near Monarch Park, like near the subways, like lots of good stuff happening there. So there still is competition, just not as much as there was. But the big thing that everybody's talking about is what's going to happen on June the 7th. That's next week. What's going to happen with the Bank of Canada announcement? Are they going to increase rates? Are they going to continue with this holding pattern? For the first time in a long time, a lot of economists and other pundits are actually split on this. Personally, I don't see why the Bank of Canada would react with an increase based on 1.1% inflation increase versus the month prior. I don't think that kind of reactionary measure is necessary. I think the Bank of Canada is a lot smarter than that. I feel like if you look at the actual numbers that are contributing to what these bigger than expected inflation numbers, the increased cost of carrying a mortgage, the mortgage interest cost, is a tremendous contributor to that increase in inflation for April. So if you kind of factor that in and understand that there are certain things that are getting less expensive, people are spending a little less money out there. But during the summertime, as we approach summer, people tend to spend more anyway around this time of year. But I really don't think that the Bank of Canada is going to have some sort of knee-jerk reaction to this what could be a blip. Now, if once the May numbers come out and we have inflation telling us a different story, then maybe consider a hike at the next announcement. But I really think that June the 7th is going to be a no news kind of day where we are likely going to hold. But again, we don't ever for sure know. The Bank of Canada is relatively tight this time around. So we'll see what happens on the 7th. But again, if you are actively buying right now, you should be calling your mortgage professional to lock in your rate, whatever that rate is today. A simple pre-approval, it'll take you 5 minutes just to protect yourself against any upcoming increases. Those low rates are locked in for up to 90 days. So you've got lots of time to continue shopping while protecting your financial interests. And, you know, if there is no increase, or even if rates come down, rates are not coming down in 2023, by the way. Just in case anybody was confused about that, inflation is nowhere near the 2% target for the Bank of Canada to even consider lowering interest rates right now. So I just don't believe there are going to be too many, if any, increases for the remainder of the year. But that's a pretty big call to make considering we're only in May right now. So we'll see how that progresses. But anyway, if you do get a pre-approval today and rates do happen to go down for whatever reason, you're always guaranteed the lower rate. It just protects you against rates going up. So as a buyer, I would definitely do that. Overall, I think that if you are a seller right now, I would certainly consider selling before you buy. Of course, it depends on the neighborhood, but if this was February, March, April, I might say, okay, there's so few listings out there. Let's go out there and find something to buy first, knowing that your house will likely sell pretty fast for a fairly predictable amount. But right now, the market's a little bit funny for houses. Some are selling, some are not. Some are having to relist after having an unsuccessful offer night. So we will start to see more of that happen as inventory continues to increase. But that doesn't mean there's any sort of tanking or market crash happening. It just means people have to use a strategy that works in a market that is, better supplied. Because if you are in a market that is undersupplied severely, especially, you need to, it's really hard to pinpoint an exact list price. Like, you don't know where a buyer is going to go with it because that's literally their only option sometimes. So it's really important. And I know a lot of people hate on this, but the underlisting strategy really, really works. Otherwise, we just wouldn't do it. So I'm sorry that it frustrates some buyers, but working in the seller's best interest, that usually nets the seller more money. And of course, you have likely heard of the couple of agents out of Quebec. I'm not sure what city they were in, but they were found to have been faking these multiple offer situations to jack the prices up of the homes they were selling. And I'm not saying that sort of thing doesn't happen out there, but it's one of those things that you do have a lot of protections in place to make sure here in Ontario that you can, for example, if you are entering a multiple offer situation, ask your agent to speak to the listing agent and just find out which brokerage the other offers are from. They're not really obligated to tell you too much. However, I mean, the only thing that sucks about this is if you feel like you're being misled for whatever reason, you really can't do anything about it in real time. You have to put in a complaint to the Real Estate Council of Ontario, who then starts an investigation. And the Real Estate Council would ask for certain documents that you as a buyer, due to privacy concerns, wouldn't be able to see. So that's when any sort of deceit would come up at that point, but you would have already missed out on the property, unfortunately. But generally, if you're working with a strong agent with a good reputation that has strong agent relationships in the community, you shouldn't come up against something like this, but there are ways for you to be a little bit more sure than completely in the dark. So speak to your agent about that. And at the end of the day, I'm all for open auctions, but if you are promoting open auctions as some sort of affordability measure, like assuming people are paying hundreds of thousands of dollars over the top of the next best offer, it's just not a thing. So there's been no proven case of an auction somehow making properties less expensive or more affordable or more predictable. You can just see what you're up against in real time. So I'm all for it, and whatever a seller wants to do, I will do. But it's not one of those things that's going to, it adds transparency, which is one of my absolute core values, but it's certainly not going to make things any cheaper. So but anyway, with houses, we won't really need to worry about that stuff as we head into the next few months, because I really feel like there's going to be enough supply to meet demand at some point. But again, if on June the 7th, there is no increase in the overnight lending rate, then we might see some buyers that would have otherwise sat on the fence, or even some of those borderline buyers that might be priced out, come back. So it could be a little bit more active this summer than I expect. But I think the lull will be there nonetheless, as people are really excited to get out there and enjoy the summer. Not that we've been locked down this whole time, but some people, I guess, have, that are a little more sensitive to the COVID situation. So I think I'm going to keep this one relatively short. So as a condo buyer right now, like, you definitely need to be out there and fully prepared with your financing and your deposit and all that stuff. But overall, like, keeping an eye on supply, we really don't have we really don't have an insane sort of signal of any sort of major correction coming up from what I can see. And you can look at the article yourself, read through it. Make sure you read below where I've put my sort of commentary at the top, because that's where I have all the numbers, all the days on market data, all the listing data, all the average price data for those 5 communities down there. And exciting news for us, we just opened our Victoria, British Columbia office. So now we can serve our clients out there in Victoria, British Columbia, and Vancouver coming soon after that. So that's pretty exciting stuff out there. And we'll be creating a market report similar to this for the Victoria area. So if you're out there and you're watching this, I come out there once a month now. So let's hook up and talk about it. We've got a great office space down near Chinatown, and excited to show you all that stuff. So for now, I'm going to leave it right there. There's a link to book a call with me below. There's also a link to read the full article below, and also a link to subscribe to the newsletter so you get this emailed out before anybody else. So if you've had any value from any of the stuff that I've provided here, I'd love to hear that in the comments below, or send me a private message so we can talk about your specific situation. But right now, I'm going to sign off from week 169 from the Raccoon Den, and we will talk next week. Week 170 is right around the corner. Thanks, everyone.